Welcome to another episode of Millennial Money Matters with Derek and Kelly. Kelly, how are you doing today?
I am great. You know, it's sunny out. I feel like we say this a lot, but the weather has been wackadoo here in Connecticut. So give me some sunshine and I'm a happy girl.
Yeah, welcome to New England. Yeah. It's a fickle mistress, the weather here.
Well, just like a lot of things.
Yeah, pretty much. Yeah.
Like what we're talking about today.
Yeah, today we got some, fun stuff. I feel like today's going to be a little bit more of a fun podcast because, everyone loves to talk about how to make money so much, so quickly. And we have the recipe for you to do that, right?
Right. Get rich quick with GameStop.
GameStop, yes. It's back in the news. The sequel has returned, and we're going to talk a little bit about what that whole thing is about and how you can lose all your money. Get all your money. What is it? What are we doing again?
We're making money. We're here to make money. But I think it's a great concept, right? Like, again, standard millennial core of Reddit and the internet and where can you make money. And we see all this stuff about these meme stocks and Bitcoins and all of the like stuff that is non-traditional in investing, right? It's not like your standard issue. And I see articles about it and stuff, and I don't really get it, and I kind of just tune it out. But I will have clients come to me with, hey, I've got, $100,000 in my Robinhood account. I've got, money over here. And I'm like, I don't even know what that is. So what is a meme stock, Derek? What is this?
All right. So the best way to describe this is, there's certain platforms on the internets now, right? So you have places like WallStreetBets, which is on Reddit, and they'll go through and these finance bros are essentially talking about all these like hot stocks that they want to buy. And, some of them are very well researched and some of them are literally just someone just throwing some stuff at the wall and see what sticks, right? So a lot of these quote unquote meme stocks come from like those types of platforms where they're just people kind of talking about what are the things that they're betting on financially in the market. And like some are day traders, some are people just average Joes that are just reading these things and trying to find, a little golden nugget here or there.
Get rich quick scheme.
Yeah, like what's the easy thing I can do to make a ton of money, which I think is everyone's dream, right? Like, honestly, if I could just do nothing and make a ton of money, that'd be awesome.
It'd be amazing. I'm here for it. I get the allure of it for exactly that reason, right? That we are all looking for the get rich quick scheme, and when somebody's telling you can make a lot of money doing something that seems relatively easily, you're like, yeah, I'd be in. But what's the downsides of this is you can lose your money just as quickly.
Very quickly. The challenge with all of these meme stocks in general is that they're generally very short, quick things, right? They're not going to last. So let's take a look at GameStop, right? So that's the most famous one. That was the whole Roaring Kitty thing where he had his beer and his cats and his YouTube channel, and he made comments on WallStreetBets. And the business itself is dying, right? So people are not going to GameStop and buying video games anymore. They're not looking at and saying, "Oh, I'm going to definitely have another console. I'm not trading my Nintendo in anymore," right? Like those are gone, right? So it's a bad business model in general. But he firmly, quote unquote, believed in it or not. Who knows for sure? Maybe he was just doing all this thing to kind of get the stock to rise. But the thing is, specific with GameStop, it was a heavily shorted stock. So that means that there are institutions on Wall Street, so the big wigs, and they're saying this company is so bad, we're going to actively bet that they're going to lose money. And their stock's going to lose value.
Bet, like, are we really talking like gambling style? Like, because when we talk about betting is a word that we kind of take to gambling. You're going to bet who's going to win and who's going to lose. It's kind of the same thing.
So I always hate using the word bet for investing, especially when you're investing, long term with companies. Because to me, there's a huge difference between going to a casino and putting money on blackjack when their odds are literally in the casino's favor. Like if you stay long enough, they are just going to take your money. Like that is exactly how they're designed. If you're investing in the stock market, you're actually investing in companies that are usually generally profitable. They're doing well. So if you're investing in like, Microsoft or Amazon or some of these big Fortune 500 companies, like the odds that they're going to go out of business are
so
fairly low.
So that's not really a bet.
No, because think about it. If you owned some of Amazon, you'd be like, this is awesome, right? So that's essentially what you're doing when you're buying stocks. However, there are companies that aren't doing well. And so a lot of these institutions are saying, okay, well, based on the research we've done, like their profits are going down, their revenue is going down. We think the industry is dying. We're going to place our money, and we think, based on our research, that the stock is going to continue to decline in value. And if you short it, you can actually place a bet on, I don't want to say bet again, but you could actually put money that says, okay, I'm going to make money if the stock does go down. So that's essentially what shorting is. And specifically what happened with these meme stocks is they looked at and saying, and this kind of goes back a little to Occupy Wall Street, where everyone was so mad because these financial institutions basically let us down because of all the stuff that we talked about in previous episodes about the mortgage industry and all this stuff, right? So saying, well, F you, right? We're gonna go against you shorters because they're high. When you short, you're typically leveraged, so you're not just putting just your dollars in, you're putting other dollars on top of that. So and your losses can be almost infinite because the stock can go up significantly.
Wow.
So these people are saying, all right, we're gonna say F you to these folks because they're the institutional, they're the big dogs in the market. This is where all the big money is. We're going to come after you, right? So these heavily shorted positions, we're going to go against them. We're going to get the stock to rise. And we all buy it together. So this is where the short-term part of the market goes into play is if there's a lot of demand for a particular stock, that price will go up.
Wow. So that's really what was happening.
All these people pouring into this one stock, and they're all doing it together, and they're all holding it together. That's why the stock rocketed.
And if you look at it, it rocketed.
Yeah.
Like people were overnight millionaires.
On paper.
Right. And then overnight
losers.
Yeah.
Well, I mean, that's the thing, because, what happened with specifically that stock is it got shut down with Robinhood. They couldn't trade anymore. Then the stock dropped, and, a lot of people were screwed. But that's where you really have to be careful about this whole meme stock frenzy. So I'm not a huge fan of it. I would never recommend a client getting into it. But let's say you say, hey, Derek, I don't care what you think. I'm going to do it anyway. At least be smart about it, right? So there's a couple ways you could be smart about it. Know that this is a short-term thing. This is not something you're going to buy and hold forever.
You're going to put the money in and hopefully time it right and get the money back out again.
Yeah, because over the long haul, stocks in general are a reflection of earnings. So you have to be a good company to make money over time. Otherwise, the stock price is going to decline. Like, no one wants to buy a car wash where no cars ever show up, right? You're like, why would I ever buy that?
Well, and if you think about, I was doing a little bit of digging while we were talking about like who has been a meme stock, right? It's GameStop.
Yep.
Not a great business model at the moment. AMC Theaters, which was during the pandemic when nobody was going to the movies. Bed Bath & Beyond, and we all know how that ended for Bed Bath & Beyond.
They went to the Beyond, yeah.
They went to the Beyond. So they are, right, you're looking at these are not your Microsofts and your Apples and your companies that are doing well.
Right. I mean, would you invest in this company for the next 20 years?
Yeah, no
chance.
No chance.
Right, I'd rather get a robot vacuum company or like
correct.
Something that I think is going to be around.
AI chip, something like that you think is gonna have some long-term power here. These we knew prior to anybody purchasing them that they were problematic.
Yeah, I mean, so the real only value of these stocks going up was the excess demand that flooded the market through all these communities that are online that are saying, hey, screw you, institutions. Hey, we feel left out, or the people that came in super late trying to chase some money because they saw it on the news. I mean, that's the other huge part about investing in general, and one of the challenge I have as a financial advisor talking to folks, because I often get, hey, I saw this on the news, and I'm going to tell you right now, the rule of thumb is if you see it on the news, it's too late.
You've missed the boat.
You missed it. It's gone. The news is not the fastest ones on the scene always. They're more reactive. So if you're seeing this on the news, it's too late. You've already missed it. Like, it's like a drug announces a new, hey, we have this cancer drug. It's going to cure cancer across the board. Everyone's like, oh, cool. Can I invest in that company? Like, yeah, dude, but the stock price already went up, 400% because
of the news. Yeah. The people who got that were the people kind of in the know, who saw it coming, who, they're the ones who made it rise that much.
Well, you just had to be in there beforehand, right? Yeah. You had to think, okay, well, maybe they will come out with something like that, right? So you have to be ahead of time with that stuff, because it's just too hard to follow the news because everything reacts so fast. I mean, there's literally firms out there that will run fiber optic wire in a shorter time frame to the stock exchange just so they can jump on order by milliseconds.
Wow.
So if you think you're going to hear something on CNN and be like, oh, I'm going to buy this stock now, like, you have no chance.
It's gone. Okay, so what else can we do to do this smartly if you're going to do it?
Well, I think the big thing is if I always recommend if you're going to have some kind of quote unquote play money, have your core investment be your core investment. Like, okay, if you're on track for retirement, we're going to do some boring investments. You need to be boring about it. Invest in the total stock market, have a diverse portfolio, all that stuff that advisors say over and over again. But I still have clients that say, look, I just want to have some money that I want to, maybe play with, quote unquote, or do whatever, right? That's fine. Just make it a small percentage. Make it something that you can absolutely lose, and just pick stocks like with maybe a little bit of a checklist. Like, is this a good company? Do I know that is the CEO a good CEO? Are they a good management team? Do they have, one of the things you should probably look forward to is they have women on the board because, companies with women on the board actually do better. Go figure, right?
Look at that.
Yeah.
Not surprising.
So there's certain things you should check out. Like, do I understand this business? Do I understand how they make money? Are they improving their revenue every year? Like, there's just a few like small things you can check in 5 minutes on like, even Yahoo Finance to say, okay, is this going to be a better investment? And then just, put your money in there and hold it. Don't try and day trade because, I looked up some stats. Day traders, like quote unquote professional day traders, only about 20% of them will actually make money in a given year.
Wow.
And consistently over time, 1% make money.
So and what is a day trader? Just for people who don't know, what does a day trader do?
So day traders are typically those people that are trying to trade stocks within the same day. So let's say you buy, for example, Microsoft in the morning, and then 3 hours later you're selling it.
So you're looking for those minute. You're trying to pull money from all the little spots where it's rising in a particular day. You're not. This is again not a long-term investment. This is
someone following a chart.
I think this is going to go up by $10 today, so I'm going to buy this many shares of it, grab it back out again, put it in this other one that's low that I think is going to go up by $10. So you're trying to pull little bits of money to make big bits of money.
Correct. Or sometimes they're making big bets, but in general, they're looking at charts and saying, okay, well, this is at this price, and this is on a 52-week low, and blah blah blah. Whatever metrics they're looking at, but they're thinking, okay, this thing is going to pop even 5% today. I'm gonna put my money in there. So they're the real short term, but it's really risky because stocks move a lot in a given day, and they don't always go up. So it's a real challenge for people to consistently do that because you have to consistently basically predict the weather. I mean, look at how accurate your weatherman is. So good luck. It's a lot of movement on news, especially in the short term, and that's one of the challenges we have because we don't know what news is going to come out today or tomorrow.
Yeah, well, and that's true with really everything in finances, right? I will go back to the interest rate because that's what I know. The interest rate conversation, when interest rates initially dropped in 2020, they actually dropped pre-pandemic. Mm-hmm. It was because news of the pandemic was coming out of China, and it happened a few weeks before it really shut down here in the U.S. And it was like on a dime. It was literally we were locking rates 1 week at one set of prices, and they were just dropping every single day, and we had no what's happening? What's happening?
Right. Well, so imagine this. Okay, you've got to make a investment decisions today on what the interest is going to do at the end of the day or beginning of the day, middle of the day.
Yeah.
How would you even?
Yeah, and it's tough. Like last week, again in the markets was a great example. We don't always put these out by the week, but in the world of mortgages, we had a really great beginning of the week, and then Friday a CPI report came out. It just trashed all of the gains we made in rates, and rates are not great again. And there was speculation that CPI report was going to be different than what it was. So if you were reading anything in the news, you were reading any of the people who we listen to in mortgages, you'd be like, okay, we're going to have some better rates. The CPI report's going to come in good. No, it didn't. Yeah. It was not good. So that's really what happens with us too, is we think we have all the information, but you never have it till the news comes out.
No, you never have it, and you can make your best educated guesses. Sometimes even being kind of too quote unquote too smart about this stuff can be a challenge as well because you're overthinking. Oh, if this happens, this lever's going to be pulled, and this is going to happen. It just can get really challenging. And the other thing is the amount of time it takes you to do all this day trading stuff. Like you can't do it. Oh, I've got an hour at lunchtime because, whatever, my boss is not around.
Because things could have already changed.
Things could have already changed. Like I said, there's people that do this all the time. And these mutual fund managers that don't outperform the market on a consistent basis over time. So, the odds of you actually, really hitting it big are pretty minimal. I get questions every other year about different stuff. Like, what about marijuana stocks? Or what about, Bitcoin was big for a while, then it goes away, then it comes back again. So there's all these different things that just will come up that people like to attach to. We kind of tend to have this herd mentality when it comes to things. And it's generally, this president's coming in office, so I think I should invest in oil now because we have a Republican president, right? So, or vice versa with the Democratic president. Now we got to invest in green energy because they're going to have a green energy bill. And that stuff never happens. Is this a good business? That should be your first question.
Is this a good business? And I don't think the average consumer is asking that question. I think, especially again, we're right, talking millennials, we do tend to be looking for the fast way to make money. So it becomes more about what media am I consuming? And I think again, the millennial way, if you spend any time on TikTok, and TikTok is, just a delightful time suck for anybody, but there's a lot of creators that are making, content about these sort of meme stocks and how to get rich. And, we did an episode about house hacking, which comes right from, sort of TikTok, and people are watching these and they're saying, oh, this guy got 1 million views or 2 million views, and that's making them an authority. And you have no idea what this person's background is. And I think like Roaring Kitty is a great example. Who is Roaring Kitty and what specialization, licenses, education, knowledge do they have on this? Nobody knows.
Well, actually, so counterpoint, people do know, but he actually did have some financial advisor licenses, and he worked for, I believe, Mass Mutual. So he actually was in big trouble because he was licensed. All the challenge a lot of these finfluencers is they are not licensed whatsoever. 90%.
Did you just say finfluencer?
Financial influencers.
Finfluencer.
Yeah, get with the lingo, Cal.
Wow. Webster Dictionary 2024. Yeah. Finfluencer. That's a new one for me.
Well, I actually researched this. I saw the study come across. I was like, this is kind of crazy. It was by Swiss Finance, I believe, and they were talking about the underperformance of these finfluencers, and they said it was pretty staggering. And ironically, the more people that follow them, typically the worse they were. I think only about 16% of them actually outperformed the market. Everyone else either underperformed or greatly underperformed.
Well, you know what? You know why, right? Because they're not making money from doing the things they're telling you to do. They're making money from your consumption of their content. So they're getting money from creator funds and Instagram for views and likes. So the information that they're giving you is not about you finding financial success. It's about them getting views, likes, and comments so they get paid. Right. And a lot of people just don't realize that about influencing in general. They're not showing, and this is for all influencers, they're not showing you a product because they like it. They're showing you a product because that's going to be the product that gets them more money.
Right. Yeah, they want to show you, oh, this is my system. This is my XYZ. This will solve all your problems and it'll do it very quickly and blah, 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 blah. And it never works out that way. I mean, and I know, you and I are both kind of pretty active online. I would say that my more quote unquote sensational posts tend to get more views and my boring posts don't.
100%.
But the boring stuff is the stuff that's going to work for you.
It's the good stuff.
It is the good stuff. And that's the challenge that we have because, the more sensational they are, the more views they're going to get. And the more views they're going to get, the more followers they're going to get. And it just kind of snowballs from there. And now they're going to say, okay, well, now we got to be more hyperbolic with a lot of the things that we're talking about and a lot of the investments we make. And I see so much stuff out there that's just so wrong and not good advice and doesn't even apply to people. It just, and the questions I get now are kind of ridiculous. Like I got a question the other day. It was like, oh, I'm a W-2 person. Should I open an LLC to save taxes? Like that does absolutely nothing to save taxes.
Where did you hear that? Well, and so I, in preparation for this episode, logged into WallStreetBets on Reddit just to see. I was like, let me see what's going on here. And I am a minor Reddit user because people do ask a lot of financial questions on Reddit, and I like to see what are my potential clientele asking, right? So there's a bunch of like first time home buyer chats and stuff like that in there. And I'll go see like what are people asking. So I was like, let me log into WallStreetBets and see. Wow. It was an impressive compilation of bad information, inappropriate language, inappropriate memes. But I do get where if I was a younger adult and I was looking again for that get rich quick, where it would be intoxicating. Like where reading something like WallStreetBets and see people are posting pictures of their Robinhood accounts and you're seeing $1 million and they're telling you I only put $1,000 in and look where I am. It would be intoxicating. Like, oh, I could do that too. It's only $1,000. And this is where it really becomes a gambling problem.
Well, I mean, it's basically the same concept as the lottery.
Yeah.
Because you're saying, okay, can I put a little bit of money in and make a ton of money on the back end, get an asymmetric return? And that looks alluring, right?
Yeah,
Who would want to put $100 in to get 10 grand? I mean, that'd be awesome.
I would do it. If somebody could guarantee me that, I would do it every day.
All
right?
day.
We would all do it. But then if you see the other side to it, so then I was doing research about like what happened to all these people in 2021. And there are story after story of people who lost their life savings, took out home equity lines of credits on their homes, lost their jobs. There was a story of a guy who convinced his mom to give up her retirement savings so he could bet on GameStop. She like forked over her 401k. He lost all his money plus all her money. They lost their house. And, this seems like super dramatic, right? Super dramatic. And are 90% of the people, is this what's happening to? No, right? They just have their little bit of play money in there. But the people who find this intoxicating don't realize that. Right. They don't realize that you're actually the one that these guys are making money on.
Well, I mean, not only that, I think the one thing that I would say is when it comes to investing in stock, you need to know two things. When am I getting in, which a lot of people got in, and when am I getting out? And they had no plan for when to get out because Roaring Kitty said you got to keep holding, or
because Roaring Kitty was the one who was winning on this.
he did very well with
and
this.
he's still doing well. So it's come up again, right, for the first time since 2021 because he is re-advertising it.
You know what else came up on my Facebook today?
Wow.
A Roaring Kitty ad
Oh.
for a course.
Oh, look at that.
Look at that.
That's
Exactly.
where it came from.
They must have, Facebook knows, right? My phone is definitely following us, right? Because we talked about this. So obviously they're following us here. But that just goes to show you, if you have an audience, you have some equivalency of power or ability to generate revenue. And, there are a swath of people that absolutely trust him because he made all this money, so I can do it too.
Well, and here's the thing, guys. Let's be honest. If Roaring Kitty was truthfully making all this money from this stock, he doesn't need to sell you a course.
Correct.
The course is the product, not what you're buying, not the stock. It's the course. And that, I think, again, this is like that we could do a whole episode on influencers, Derek. We probably should. The finance of influencing, but that's really where a lot of this comes from, is the influencer is making money by influencing you, not by the stock that he's holding. Again, I think they said he may be on target to make $1 billion with this current resurgence, or he was last week. So I was looking at the things, but it's already gone south.
It has. Yeah, and that's the problem with all these memes. Like, they're comments. They're going to be there for a hot second, and they're going to leave. And you have to know that. So if you're up, hey, look, if you're up 10, 20% in a month, that's awesome. Just get out. Get out.
Don't hold.
Don't hold, or at least sell enough where you get your profits back and plus a little extra if you want to keep a little bit of money in there. Like, peel some stuff off, pull some chips off the table, so to speak, right? So get some money out of there and don't lose your shirt, because that's where people run into problems. They, like I said, they probably get in too late because they heard about this from somewhere else that was way down the line. Or they just stayed in forever when, clearly this is not a good business. And it always goes back to that, because the water's going to find its own level at some point. And if it's not a good business, the market's going to catch up to it.
Oh, the water's going to find its own level at some point. That's a good one. That's a Derekism right there. That's a good one.
Yeah. All right. I guess I'm done here today.
All right. We're done. No. So I think the long story short here is, don't believe everything you read or watch in the news, right? Mm-hmm. There's no such thing as free money, friends. There's no such thing as free money.
No, it's going to come with something. I think the other thing that, as I was doing some research for this as well, is the herd mentality. So I was doing a little bit of research on Robinhood specifically, and what the average returns were. Are they good? Are they bad? And they tend to be a few things that the research reported was there's a high concentration in a small number of stocks. So I think it was something like 35% of users had 10 or less stocks. So there's some definite risk associated with that, even if you were to pick 10 great companies. The other thing I was looking at was basically there's what's called a herd mentality, and this kind of goes with the news. So they'll kind of dump in or pile in based on trending tickers. So trending tickers means a lot of people are buying it. Mm-hmm. So it's a quote unquote popular stock at the moment. And then basically what happens is it goes up for a little bit, and then the following month's returns on average are down 5%.
Wow. So
you're going to follow this herd into this thing, and then all of a sudden it's going to drop off a little bit of a cliff.
And you're like, what am I doing here?
Right. And they just keep repeating this because this went up. And the problem is you're reacting to this because generally you're buying something that has already gone up, and you want to get there before the race starts.
Yeah. So you're 3/4 of the way into the rise. So now you're here for the full decline.
Right. Right. And that's one of the problems we see is because there's just a timing aspect of this that people try and figure out, this is a good time to buy, or it's already going up, so I may as well jump in now because it goes up. And we just have this stupid evolutionary mind where we're like, hey, if things are good, they're going to keep going good, right? Yeah. And if they're bad, they're going to stay bad. And it's like the worst brain to have for investing. And we have to really fight that because it's there and it's real. And it's what's helped us survive as a society and humans, but it does not help when it comes to investing.
Interesting. What else you got?
Well, the other thing is we always have this Dalbar study, right? So it's a famous study that almost every financial advisor keeps talking about. But basically, it goes from 2001 to 2022, and they said the average investor has returned. Do you know what they've returned on average?
7%.
2.9%.
What?
Per year? Yeah.
What?
The S&P during that time frame was 7.5.
Oh, so what's the difference?
Timing. People go in, people leave. I had people in 2008 tell me I got out of the market right in 2007. I'm like, when'd you get back in? She's like, well, I haven't yet. Well, it's 2014. The market's way above what it was, 6 years ago. Oh, should I get it now?
You're like, you're too late. Yeah. And we saw that too, again, in kind of mortgages, that people in 2020 pulled all their money and put it in cash because there was that momentary decline, but it was momentary, and then it
like 45 days.
Yeah, and I'm like, you just lost. I know that for a few days that looked rough, but now where would you be today, 4 years later?
Yeah, you'd be much higher. And the other thing I looked at too was Morningstar had a study that said basically if you just bought the people that bought the same in actual mutual funds or indexes, just because of timing purposes, they actually underperformed those by 1.68% on average. So you like, I don't know why people are just kind of trying to time the market, but if you just got into those investments, you'd be up another 1.5%.
But you were trying to time it. And that's, I think, again, part of this conversation is the timing of things. That's the whole point of, some of these conversations we're having is most of this stuff is long-term. Like you need to be in it for the long term. And when you're buying it to ditch it or to, again, overthink it, I think that's really where people are hurting themselves.
Yeah. And I think that goes down to when it comes to investing is what is the purpose of this account?
What are you doing with it?
Am I buying a house within 2 years? Then don't be in Roaring Kitty, right? Like you need to be in, cash or something very safe because a 20% drop is not going to help you with your mortgage payment or down payment.
I'll be unhappy with that as your mortgage loan officer.
Yeah. But if you're, hey, I'm 35 years old and I've got 30 years to retirement. It should be aggressive, but you know what? Don't try and mess around because, 1 week, you think really 1 week out of 30 years is going to matter in terms of your portfolio? No chance.
No. Well, and don't listen to the internet necessarily for your finance advice, right? The finfluencers, I'm going to use the new cool trendy term. Again, they're there to make their own money. They're not there to make you money.
Right. Yeah, they're there to build an audience and sell you a course.
Of course. Roaring Kitty.
Right. But there are ways like, if you're really looking at a financial influencer, let's say, and you want to say, hey, this kind of like actually sounds like a good idea. Like, okay, take a pause. Does this apply to me? Is there a professional that I can trust to ask if this does make more sense? Because I think that's been a part of my job now has been more of a filter than in a information hogger because anyone can find anything on the internet nowadays.
Absolutely.
Now the real thing is like, does this apply to me and will this help me in my situation?
And if it doesn't, you're going to tell people this is not going to be great for you.
Right. So, not saying you have to always use a professional, but if you at least ask yourself those two questions, like, does this apply to me and will it help my situation? Okay, maybe let's take the next step and do some more research on it, but don't just like blindly follow someone because they have a cool cat head or whatever he's doing nowadays.
1 million followers or a lot of likes or none of that is great. It's not a great bar for your financial advice.
I mean, look, not everyone online's an idiot. There are a lot of people out there that do know what they're talking about, but it's everything's so situational. You've got to really look and see like how does this apply to my life, and if I do this, what's going to happen on the downside? If you like play that out in your head with this GameStop thing and said, okay, let's say I do put my grandma's house in this GameStop. Like, what could happen? Oh, could she lose her house? Or maybe I shouldn't do that.
Yeah, maybe not a great idea.
Maybe I should just throw like a couple bucks in there.
Yeah. Yeah. Well, and I think again, anytime you're trying something new that is out of the realm of traditional, maybe start with a couple bucks, see how it's going. And as you said at the beginning, and I think this is the piece of advice that people really need to hear, is it's money that is excess. That's what you're putting in this. If you have already funded your retirement goals, your other investing goals, your savings goals for the year, okay, that's the money we can use. But if you have $0 to your name, and we see this on the mortgage side where I'm like, you've got $3 in your account and you're going to get paid a $100 bonus next week, don't put your $100 bonus in Robinhood, right? That's not a great place for it. It needs to be in your savings account so you can use it in an emergency.
Right. If your kid flushes the wallet down the toilet, is it going to freak you out?
Yeah.
If that money's going to freak you out, then don't invest in that.
If your hot water heater is going to blow and you have no funds to replace it, do not put money in Robinhood.
Right. No. It's just like I said, it's just so tough to consistently pick the right stock because even over on the average, I think less than 50% of stocks actually outperform the S&P.
Wow.
I think last year was something like 20% of them did.
And like you as the average consumer, could you name those? No.
No chance.
No chance.
I mean, you could probably name a couple like NVIDIA and Microsoft and all those jazz, but like you're not naming, I don't know, S&P stock number 465, right? You're just like, I probably can't. There's so many companies out there. I mean, they think there's like 3,000 in the whole U.S. stock exchange or over 3,000. So are you going to do research on all 3,000 companies and figure out who their manager is and who their CEO is and what their revenue is and their business model?
If there's ladies on the board, you heard that from Derek. If there's ladies on the board, it's going to perform better.
It's a thing. Check it out.
All right. We could do a whole episode on that. I love it.
Ladies on the board?
Ladies on the board.
All right. We should do it.
Awesome. Well, thank you for joining us. We hope this one was fun and a little bit different.
Yeah, hope so. All right, Kelly. We'll see you guys next time.
All right.
Economic forecasts set forth may not develop as predicted, and there can be no guarantee that strategies promoted will be successful. All performance reference is historical and is no guarantee of future results. All indices are unmanaged and may not be invested into directly. There is no assurance that the techniques and strategies discussed are suitable for all investors or will yield positive outcomes. The purchase of certain securities may be required to affect some of the strategies. Investing involves risks, including possible loss of principal.